Greetings and welcome back to The Pride. My name's Muphasa, El Matador. They call me the Curious Cat. My job is pretty simple. I help grow your conviction. Conviction to buy, conviction to sell, conviction to hold. And today we're looking at Alphabet. We're just going to call it Google. If you're new to the channel, hit the like and subscribe button because out here in The Pride, we only invest in trends that are going to last the next decade or more. And today's trend is online search and advertising. Alphabet is at the very top of this particular industry with 80% of the global market share. Search and Google it are synonymous, but Alphabet is into a lot of things like drone tech with Wing, self-driving cars with Waymo, a lot more. But 99% of their revenue comes from Google and 85% of that revenue is actually advertising. Fun fact, Google processes 3 times the ads of Bing, 4 times the ads of Yahoo. With the company that's into so much, they are reliant on advertising for revenue. YouTube plays a big part of that. Google search, Google ads, all of this is the bread and butter of Google. I don't see this changing. If you see a future where Google is not going to be dominant, let me know in the comment section below. What I am really worried about is the fact that the reliance on advertising, even though they're making efforts, it's still not where it's supposed to be. And we'll be looking at that in the bearish case. Google has to diversify the income stream, but they are into a lot of things. They have a lot of products like their tablets, their phones, Nest, the games, but still, most of the revenue comes from advertising. It's just a big part of the business. It's hard to shake it off, but why should they? They are making a lot of money. I'm pretty excited about Waymo because they have SF, San Francisco, and Phoenix as their 2 locations. Hopefully, this will start bringing in some revenue in the future. You're looking at tens of billions in market cap if they can dominate this particular space. They're also into fiber optics, which is fast internet for the world. Now, I think the big thing to really note is where's the money coming from. You can see that YouTube ads, Google search and others, as well as advertising from Google, is the core of this particular business. They are heavily invested in machine learning, artificial intelligence to give them the edge. And they are only behind AWS and Microsoft's Azure when it comes to their cloud. But the big part is YouTube. I really see YouTube as the university of the future. And one dominant part for me is 50% of these users 18 and over are literally concentrated in YouTube, and they can't, 35% of that number cannot be reached any other way. I see the Russian situation with YouTube's demonetization as pushing us back when it comes to like top line and bottom line from YouTube, but all of that is going to change. When you look at top 10 companies in the world, Apple, number 1, Alphabet, number 7. And that is going to change. When you look at the comparison between Apple, Google, and Alphabet, they're only behind Apple. 2021, they were only behind Apple when it comes to buybacks. Buybacks is a great way to bring shareholder value up, getting more money to us. And they just announced that $70 billion in buyback is going to be in effect. These are all really, really bullish cases, especially with the stock split coming up. They're going to do a 20-for-1. This gives retail traders more access to buy this particular company. Not everybody has $3,000, but now you can accumulate shares, do covered calls after the stock split, 20-for-1. So if you had the $3,000 stock, that would be $150 after the stock split. Now let's talk about the bullish case around this particular company. I particularly like the fact that the Android OS powers over 85% of the cell phones globally, and these Google apps are actually dominant on the iOS, like Google Maps, Google Gmail. And when you look at this, it's only going to continue into the future. They have huge cash generated from search business, and they are set to dominate the mobile trend because that is where desktop is going to die, mobile is going to grow, and they can meet you right there for their advertising revenue. With that said, let's look at the bearish case. The bears have a strong argument. I like to hear them out regardless, but too much capital is placed into risky bets. That is a big downside for Google, but no risk, no reward. If these bets turn around like Waymo, it could be another profitable venture, and then their reliance is it's not too much of a big deal. Little revenue diversification. Everything is concentrated around advertising, as we saw just in the review of the company going forward. And the dominance in search is not sustainable. This is a bearish argument. However, I don't see another company stepping in to take Google's position. With that said, let's look at the risk involved with this company. All investments come with risks. No risk, no reward, and Alphabet is no exception to the rule. Now, the fair market value for Alphabet is $3,600. I'm going to call it Google because Alphabet is confusing, right? This is a wide moat company, and the wide moat is attributed to the intangible asset that is the Google brand. All around the world, if you think about a question, they say Google it, right? And this has put them in a position to build a huge network effect. And that is the core of their advertising revenue. The more people that use Google, the more data that they can accumulate and use that to not only provide advertisers with more access to the end user, but the end user does get quality results the more people that are on the network. With that said, let's look at the risks associated with this particular business. The first thing that I would like to point out, as you all must have hinted already, is the uncertainty around the high dependence on advertising revenue. If there's competition like Facebook ads or any other company, TikTok, whatever, that comes through and produces a more compelling argument for their advertising, this could be a big challenge, right? The second is there's minimal switching costs in this particular industry for rival search engines. But the biggest competitor, Bing, doesn't have a big mobile presence. So it's going to be a lot of work for them to actually tap in to the market share that is Google's right now. Finally, I like to think about the ESG risks that are associated with the fact that Google is highly dependent on consumer data, the consumer behavior data. And there's a lot to talk right now in the industry about, better practices, and we can see crackdowns on Google's processes. And as far as we know, these are the major things that you should consider if you're investing in this company. With that said, here on the Pride, we look at financial analysis, technical analysis, and then we call it Stick With Me. Perfect. I like to look at these with the year range as always, right? So first things first, we're going to see 2,000, call it $2,200 to $3,000 year range. We're currently trading close to the bottom of the ocean. That's why I had to bring this up right now. You're looking at the market cap of 1.5 trillion. That's trillion with the T, and a P ratio of 21.44. All of this looks really good for this particular company. I'm going to drop it down so you can see the 5-year range. This company has continued. Like, I looked at the balance sheet and you can see that they're sitting on 150 billion net cash. You look at the growth from 2018, completely exponential. They're continuing to grow in every area of their business. This is a huge opportunity, in my opinion, of course. And so I'm going to look at the financials. On a quarterly basis, we can see exponential growth. I do think the profit margins can be a little higher. If you look on an annual basis, exponential growth in every aspect, over 200 billion coming in. This is monster stuff, right? 257 billion in revenue, net income of 76 billion. You're looking at the profit margin of 29.51%. Out here in the Pride, 20% gets us excited. 29.51 is just stellar for a business. Cost of revenue, 110 billion. That's up 30%. This company does have a lot of cash, and I believe a lot of acquisitions will be coming down the line. Cash and cash equivalents, 20 billion. Net change in cash, 5 billion. all around looking good. I would like to look at the quarterly real quick before I move on to other things. And you can see 27% profit margin, 75 billion, 20 billion net income. Pretty stellar all around. They do not pay any dividend. But there are other things to look at. So I'm going to compare this with the top companies in this particular space, the indirect and direct competitors. We have Apple, Microsoft, and Amazon. Microsoft has the best short-term technicals right now. It's trading the best of the lot. The rest of them are a little shaky, with Google having the worst short-term and long-term technicals. We'll be looking at the technicals after this. When we look at price targets, right? So currently, if you look at fair market value of 3,600, you're looking at almost a 50% upside from where it's trading today. 26% on the low price target of 3,000. Highest price target of 4,000 gives you 76% upside if you are to take this particular stock into your portfolio at this range. Apple, Microsoft, and Amazon don't have as much upside on the high price targets. So this one really took my attention, especially with the way it's currently trading PE and all of that. Speaking of which, let's get into PEG ratio. I like the PEG ratio because it accounts for growth going into the future. And we're looking for a score closer to 1 as the most ideal case scenario. With Amazon, you have 2.29. Microsoft, you have 2.33. Apple, you have 2.04. Look who the killer is. 1 on the dot. This is super bullish. If you've seen any of my videos, you see that this is the first time in months that we've seen any of my picks at this particular range. Super bullish. P ratio of 20 compared to the competition, 26, 29, and a massive 42. Earnings per share, 112. Amazing numbers compared to 6, 9, and 64. No dividend, which is bad. I like dividends, so I'm holding Apple and Microsoft as well as Amazon because these are just monster companies. But the buyback of 70 billion is only second to Apple, so that gives shareholder value in that sense. With that said, I think we should jump into the technicals. Awesome. The technicals are like art for me. I really, really love this. The first thing I want to point out is I'm looking at the weekly candles, and I'm going to take you guys to see the RSI shows when a stock is overbought or oversold. Anything under the close to the 30 range is oversold territory. We can see that on the weekly chart, Google is on sale, right? And I'm going to take this back to show you the last time that it traded at this level. You can see March of 2020. Anybody know what happened at that time? Pop quiz, boom, boom, boom. That was the pandemic. So you can see that the last time we had this type of bearish momentum was due to the sell-off. And if you had bought it at this time at $1,000, you would be up 100% today. And it hit $3,000. So that is 200% on the trade if you bought during the panic. Since then, it has obeyed the 21 EMA, bouncing off the 21 EMA continuously. And so I picked up my levels, right? So you can see solid support here at 1,996. Let's call it 2,000. You can see support here at 2,223, which is literally where it bounced off at the last dip. You can also see a solid ice line. Ice is when support and resistance are on the same line, and that is at 2,605, right? If you want to know how we are trading this, you would have to come join the Pride. Amazing group of individuals who do the simple things consistently. Hit the subscribe button to get more content like this. Hit the Patreon link to come join us and see how we're playing this particular stocks, options, the whole 9 yards. With that said, let's get into it, right? So we have strong resistance at 3,025, Fair market value is 3,600. So we have our levels, right? We have our buy up to at 2,600. We do not buy this stock when it crosses above that particular line. And you can see a huge range for us to do whatever we want, short term and long term. Whenever you see a convergence like this, that is an indication that the trend is going to change momentum at some point, but we would need to see how it plays out over the next coming weeks. I see it trading within the 2,300 level and 2,600 level until the bullish momentum comes back in. This is the weekly chart. If I change this to a daily chart, you can see how the candles interact with all of these levels, right? So you can see it refuses to break through this resistance at the top and is holding pretty solid with the support at the bottom right there, right? So you see how it trades on that line. It breaks, it bounces literally off the line. The market is honeycombed in buy and sell orders. It's like a self-fulfilling prophecy. Whenever you see these reach these levels, buying pressure comes in at support, selling pressure comes in at resistance. So we will be looking at these levels throughout to know how we're getting in and out of this particular trade. With that said, hit the like and subscribe button if you like content like this. And don't forget to come join us via the Patreon link so you can see how we're playing this bad boy long term and short term. With all of that said, I hope I've been able to give you the conviction to buy, hold, or sell. It's Muphasa El Matador. Peace.